Welcome to this video lesson based on trader psychology. I wanted to start with this image because it actually depicts something very interesting about trader psychology. You have several different people in this image with speech marks or speech bubbles, and they all have different things on their mind, or they're all saying different things. Some people are saying sell, some people are saying buy, some people are saying bye-bye. Okay, some people are talking about the stock and their opinions, and this is key. This is very key because it highlights several things. Well, it can highlight several things. It can highlight that one is certain. It can also highlight the fact that one is uncertain, because some people, in regards to their psychology, are very certain. So they have one thing in their mind and they stick with it. This depiction could highlight many people's lives. Okay, and I say that in regards to one person in their mind having many voices which counteracts daily, and this is really something one needs to be aware of. First and foremost, before we get started, start off by going through the customary legal disclaimer. All information provided by Vintageducation is for educational purposes. Expressed or implied in this presentation are solely relatable to the time shown and are not indicators for further gains or losses. Actual trading may result in losses, as no trading method or system is guaranteed. You accept full responsibilities for your actions, your trades, profit or loss, and agree to hold Vintageducation blameless in any and all ways. By continuing on to the next slide of this presentation, you agree to the above statements. Your level of success in attaining the results claimed in our materials depends on the time you devote, ideas and techniques mentioned in the material, your finances, knowledge, and other various skills. Since these factors differ according to individuals and can be very ambiguous, we cannot guarantee your success, nor are we responsible for any of your actions. Materials in our presentation may contain information that includes or is based upon forward-looking statements. Forward-looking statements give our private expectations or forecasts of future events. However, you must not treat them as investment advice. The video class will begin shortly. A big thing with and it's well advised when beginning or even during any part of your forex education. Okay, Vintageducation, here we advise all students, anyone, okay, beginner or advanced, to take extensive notes, because it will show itself useful in a future time. You should have a notepad or writing device available to jot down your notes. Okay, do not attempt to copy everything, every little word. Focus on key statements, key terms. The final thought we leave you is not to solely rely on taking mental or visual notes, as information trying to be retained this way can be retained wrongly, or more significantly and more damaging is not being retained at all. If you choose to take no notes, then it's clearly at your own peril. So, trader psychology. I want to start this presentation, this lesson, by relaying the fact that trading is real. Trading is very real. This isn't something that you do and you think it's a joke or it's a game. It is in fact real. And real money is won in trading and real money is lost. Now we're talking about live accounts now. I'm not talking about a dummy account, demos, nothing of that nature. We're talking about having a live trading account where there's been real money inserted into this account and you're actually trading. Real money is won and real money is lost in trading. The money that is in trading may transfer electronically from one person's account to another's account, i.e. maybe from your account to your broker's account, but it is real money nonetheless. I think the first key step to psychology is realizing the above statement. And the key to this is not many people actually realize that trading is real and regards money. It may seem very simple. It may be something you think people are foolish for not realizing, but actually realizing that trading is real, that you have the ability to really make money and you have the ability to really lose money. You get a lot of legal disclaimers. They talk about you may lose money, you can make money. A lot of people don't really grasp this. They read it but they don't really understand and really take it in. And personally for myself, I can relate what I've learned through my experience, because when I finally came to grips with this above statement, it really made my trading evolve. My trading evolved and went to another level. People say the market never goes straight in a straight line or in one direction, meaning even if the market is long, meaning the market is bullish or the market is moving up, breaks in the uptrend occur, making the market sell off for a period in time. Adding to the above point, you will make money at times and you will lose money at times. It's part of the game. It's part of trading. It's part of the business. If you go and talk to any businessman or businesswoman out there, or business organization for that matter, they'll all tell you the same thing. They may be consistently profitable, but that doesn't mean every day or every transaction they make is a profitable transaction. The right psychology will help you handle your losses correctly, and it will also help you manage your winners. So the right psychology will help you handle your losses correctly, and likewise with the winners. I recently watched a basketball game, and the commentator was speaking about a player who asked the question, why don't we learn from winning? This is something you'll be surprised at, because many people do not learn from winning. When you're winning, it's somewhat the same in regards to what you can learn in importance in regards to when you're losing. Similarly, when you're losing, there's so many things you can take from it. And also when you're winning, you may think because you're winning that's enough. It's not really enough, because that's enough for that specific time. Winning today doesn't guarantee you're going to win tomorrow. In simple terms, if you're winning today, it may even be harder to win tomorrow because you've actually won today. So learning to be consistent, learning to learn from your winning is very significant. If you feel that just because you win you don't need to learn, you're very wrong, you're mistaken. You're making a very significant mistake, because if you learn to win, you can learn to win better. If you learn how to get into trades greatly, learn how to exit trades greatly, learn how to manage trades greatly. There's always something to learn in life, and it's whether we are going to rise to the occasion and take on the challenge, or are we going to become comfortable where we are. So what is trader psychology? Big question. In terms, I define TP as the mental state. Our mental behaviors are what drive our physical nature. Our mental behaviors are what drive our physical nature. I'll repeat it one more time. Our mental behaviors are what drive our physical nature. Trading psychology will define what you do when you've just lost a trade, when you've just lost and have to reverse a position. It will define what you do when you have just won big and want more. Psychology will determine if you close out for profit or allow a winning trade to turn sour. You may not learn this straight away, as a few experiences will be needed to see exactly what I am describing. However, if you remain faithful, you will succeed and become profitable. I can personally again here talk from my experience, and I also know of others who can do the same, who have been in profit. They've been in profitable positions in their trading and watched it all go back to the market. And not only all of the profits go back to the market, it all goes back along with some added interest. So how do you feel? This is the mental state. Scared, excited, anxious, fearless. These are some of a few feelings we feel, not only when trading, but we can potentially feel these feelings at any point in our lives. Psychology separates the 95% losers in Forex from the 5% winners in Forex. If you fail at psychology, your career will be short, very short, and painful. As said before, your method has minimal impact on trading. Most traders are defined by their psychology. It is effectively winning psychology versus losing psychology. It is effectively winning psychology versus losing psychology. In my opinion, and many other skilled traders out there, this is the most significant part of the trader's toolkit. If you take a basic strategy with great psychology, you will flourish. You could have the best strategy and poor psychology, and you will lose your whole account. If you can't control what happens in the market, you need to learn to control what you have the ability to control: yourself. If you can't control what happens in the market, you need to learn to control what you have the ability to control: yourself. Psychology about managing yourself more than managing the trade. If you are not okay, your trade won't be. When you have established an edge when trading, your trades will follow. Because what managing the trade really is, in the root and core of it, is managing oneself. Psychology is something that takes time and practice. It's not something you can just, it's not something most can just learn after one day or embrace after one day. You may point to a defining moment in your trading career where you feel like you realized it and everything just flicked into gear. However, for most traders out there, it takes time. You must repeat your psychology physically and mentally, continuously, until it becomes natural. Okay, repetition. When one continues repetition, it allows the acts to become natural. And what do you do when it becomes natural? Ask yourself the question. When something becomes natural to you, what do you do? You keep doing it and practicing. Like I spoke about previously a few moments ago, about becoming comfortable and not wanting to increase. Okay, learn from your winning. Learn from winning. Many traders become comfortable and then they slip. Psychology is having control of the situation. Parents who do not control their children find it hard to parent. Trading is similar. If you cannot control the situation, you will find it hard and struggle. You won't be able to move the market when you first start trading, and if you can, you don't need to sit here and listen. Trader psychology is about being able to answer the question correctly. What is that question? When the market says no, you need to be able to give the same answer. When the market says yes, you have to be able to say yes with it. If you ever knew how to perform a role as an actor trains to, you need to apply it to this situation. Trader psychology is being able to turn the charts off when your mind is solely based on money. Psychology is being able to stop trading when you need to do other things. If you are running around the house, this isn't the time to trade. Psychology is having the mindset. Psychology is having the mindset to analyze why things are the way they are. If you are consistently losing large amounts of your account, being able to identify that you are potentially just jumping in recklessly, hoping to recoup previous losses, is essential. Psychology is being able to be truthful, not deceiving yourself about your actions. Psychology doesn't ask questions like what if, or maybe I should have. You should have done everything expected of you. Everything you do and did in the past should have been expected. Trader psychology is creating an atmosphere and remaining there at all times while at the desk. What I've mentioned already is only the beginning of psychology. We have to move on to broaden your understanding of psychology by adding some key features. How do I get my psychology right? The trader builds an edge. Discipline is a system of rules of conduct or method of practice, training to improve strength or self-control. Why is discipline important, some may ask? Well, when you want to deviate, and most traders will want to deviate, your discipline will keep you in check. Being undisciplined is one of the most common and dangerous pitfalls. It is rarely discussed, however. What you'll find from many educators out there is they talk about some of the key things like trader psychology, but they don't delve real deep into it. They'll highlight a few characteristics, won't use any real tangible examples, and at the end of the day it doesn't really help. It's just words. A trader who lacks discipline can never make it in this business. If you go out into society and do whatever you like, you won't last long. If you go and break the laws because you feel like it, you'll be arrested and put in prison. Trading is exactly the same. If you can convert the right principles from life into trading, you will be just fine. Many traders are guilty of lacking discipline for many different reasons. The main culprits are what I like to call system jumpers. System jumpers. These are traders that are constantly tweaking and changing their trading methods. And in many situations, they're tweaking and changing trading methods that are actually worth the time. These traders do not realize that learning to trade a system efficiently takes time. If you have a system, use it for a month or so. Assess after a period of time and think the system is doomed because you had more losers than you had winning trades that week. Your subsequent analysis may show you other reasons why you lost. Perhaps you wasn't disciplined, perhaps you didn't follow your rules, perhaps you risked too much money. There are so many reasons why things don't go wrong, or things go wrong, and it's about your analysis that will definitely develop you and make you a better trader in the long run. So be willing to develop. System jumping will cost you a large amount of money. What you are doing is going round and round in a circle, realistically, like a mouse chasing after cheese he will never acquire. If you keep jumping from system to system because you cannot stay disciplined to a strategy, it means you have to go through the learning curve over and over and over again. are traders who lack the discipline to stick to and learn how to trade the system. They try it for a week, just for 1 week, and when it doesn't work, they jump to the next system or method. The only system that will have you stopping after a week in trading is the system that closes your account. Guess what? That's the system you shouldn't be on, anyway. Discipline develops consistency, which all traders desire to have. All traders desire to be disciplined, but only few can really obtain this. Discipline is a key part of your psychology. Ask yourself the question now. Are you disciplined? Are you disciplined? Are you disciplined? System jumpers have only one thing lower than them in the food chain. And Forex is about food chains, by the way. And this is a system changer who not only changes every week, but when they get the right system, they throw it away also. This is due to the fact that they're used to change so much. When they're supposed to be stable and actually stay in a certain position, they keep moving because that's what they become accustomed to and used to. Another common action of an undisciplined trader is abandoning a perfectly good trading method. Every trading method has periods in which it performs below average. If it wasn't so, everyone would be profitable. We would be profitable 100% of the time, which isn't the case for everyone out there. One of my trading systems for one of my accounts, averages were as high as 65% winning trades. However, it has dropped down to below 60%. This is because market conditions change. You change also, and along with that it provides different results. Don't be scared of change, just learn from it. No matter how versatile a method may perform at peak efficiency in all market conditions, in most scenarios, a true trader has the discipline to stick to it through the hard times as well as the good times. Deciding to use another strategy you have is much different from trying to tweak a more than able strategy. Think about that. You must learn to do and not to do certain things. You must definitely learn the basics. You must be checking the news before you trade, checking whether there's important news coming out, or whether it's a calendar with limited news that day. These are all signs of good discipline. You must be reading your trading rules before you enter the trading platform, during your trading day, and after your trading day. You should learn to not listen to every wind of speculation. News and speculation are two different sources. They're completely different. You must learn not to follow a pack. Do not follow a pack in trading. If 95% of traders are failing, I don't want to be part of that 95%. So the odds of me following someone to success in Forex is lower than being by yourself and trying to learn. In many people will argue that case. I'm one of them. Okay, learn not to trade something you heard in a seminar because the presenter said so. Okay, learn that you have to backtest your strategy before using it, And more importantly, learn that nothing is like live trading. You may feel that you've backtested the strategy, which is the holy grail, but what you find is when you come to live trading, that there's no such thing as the holy grail strategy, and that trading is much harder than planning out. You must learn to review your trades each month, week or day, whatever best suits you. You must learn to listen to news as it hits the market. Whether you're going to go out and get a live news feed, which I advise you to do, you need to learn to be able to listen to the news. Taking trades, do not take trades just because someone told you to do it. Learn to do your own analysis. It's your money at the end of the day, and if you choose to listen to someone who said trade this or trade that, trade X, Y and Z, at the end of the day you can't, or you shouldn't anyway, hold that person accountable. Hold yourself accountable, because it's your money, your risk. You pressed the button or you didn't press the button, and you should be doing your own analysis. Okay, learn not to trade nearly completed moves because you missed the entry. That's a big no-no. And we move on now. Now we move on to patience is good-natured tolerance of delay or incompetence, enduring trying circumstances with even temper or characterized by such endurance. Sitting on your hands. Sitting on your hands. The latter is something that you'll hear from time to time in the trading world. It's trader speech. Now you can see these two images. Now which image do you think you should imitate in trading? Do you want to imitate the sprinter on the left, or do you want to imitate the marathon runner, or the group of marathon runners on the right? Most of you potentially went for the image to the left, which was the sprinter, and this proves the point that most are losers in trading. The image to the right, in fact, is putting you or places you on the road to winning. Now, you will never own the market, so you can never say you'll win the race. Okay, more importantly than that is, trading is not a sprint. Trading is a marathon. More importantly than that is, there are other people in trading. There's many millions out there. There's not 9 other racers in the other 9 lanes on the track. There's millions of traders. Some you can see, some you can't see. There's millions of them out there. And what you need to be mindful of the fact is, you are just one person out of those millions. Okay, and it takes patience to win a marathon. It doesn't take a 60-second burst or a 10-second burst in regards to 100 meters. Trading is marathon not like sprinting. I suggest if you picked the sprinter, then you should take that warning and make a decision to learn now. The only place you'll be sprinting in the market is to your Forex grave. Take time to assess, take time while trading, and take time in your career. The reason you need time is because you are a beginner. do not desire to be patient. Many do not desire to be patient naturally, because many just want the quick fix. They just want the money to appear like magic, so to speak. £1 million will not fall out of the sky, I tell you that. And it will not just drop into your trading account after one day of becoming a trader. Learn, remember, and embrace this. Learn, remember, and embrace this. Millions of pounds will not just fall into your hands on the first day of becoming a trader. The best traders don't need to trade the most stake. They are the ones who are most consistent. They're more consistent than the rest. The best traders, I can promise you that consistency is what will bring you growth in your account. Making £500 one month and then giving it back the next with interest is not what you desire, nor your heart. Let's look at some patience killers now. Number 1. The desire to be rich manifests itself in many ways. The main ways are fear and greed, and they inevitably lead to other problems. If you think about it, the majority of the issues newbies have stem from desire to be rich. You enter the market thinking that you're going to be rich by tomorrow, and you act that way. You start trying to act vicariously because you feel the money's just going to keep falling from the heavens. Desiring to be rich makes you overtrade. Many traders do this, and it's because their mindset is incorrect. They take many trades thinking it will make you more money. This is wrong. The more trades you take raises the probability of you losing money. What else does this desire make you? It makes you use poor money management, risking 50% of an account at a time to reap superficial amounts. Moving stop losses. Desiring to be rich makes you move stop losses. When you risk these large amounts, you won't want to lose it, so you keep adjusting stops, which will make the loss even greater. You may be taking the time to listen to this video class and make notes, and you may even think that a lot of these things don't apply to you. But if you go in to trading with such a laissez-faire approach and mindset, you will quickly remember some of these words and realize that what I was actually saying is true. For some of you out there who have traded already, you know that what I'm saying is true. Be patient and let the market show itself to you. Be patient and let the market show itself to you. Forex will not. It will likely take time. It will likely take time before you are trading well enough to leave your day job if you have one. Forex is a career, and in the long run, if you are successful, it can give you a very relaxed life. Forex can allow you to travel the world and make loads of money if you are content and you learn to be consistent. Forex can take away a 9-to-5 job. A 9-to-5 job that you hated for so many years. Forex can take that away. However, if you started trading this week or today and you plan to quit your job in 2 months because you anticipate being rich enough to buy a Ferrari, you are mistaken. Most traders come in to the battlefield, and trading is a battlefield, I mistake you not, and they think that the money is destined to them because they found something so great. Well, there's many people out there that have found this and want to make money from it, and it's a battlefield. You're competing out there, not only with other people like self, but many people that have been doing this for years and have much more capital than you. This is a career, not a get rich quick scheme. You have the ability to make a good career out of this and actually make consistently large amounts of money. But this is not a get rich quick scheme. If you want to be rich quick, hit the casinos in Vegas and see where that leaves you. See where that leaves you. If you want to be rich quick, hit the casinos in Vegas and see where that leaves you. When you enter the markets, you are a tourist. When you are a tourist, not a tour guide. You are not a tour guide when you enter the market. You are a tourist. You have no idea where to go, and you need people to guide you before you can then take a tour guide and be leading people around, being the tour guide. When you learn the sites, you'll be able to give tour guides. The more you practice the winning principles, the more you'll be experienced, the closer you are to becoming rich, realistically. And the price has moved 10 pips from your entry. What do you do? Do you take the trade because it's the trade you called and it's going in your direction? Or do you stand aside and watch the market continue to go in the direction you already afore anticipated? Your friend tells you right now you need to go short, you need to sell the market. What do you do? Your friend has given you advice before and been right. Why aren't they right this time? You say. Do you take the short? Or do you say no? You've patiently waited for your setup and it arrives when you are there. What do you do? You're watching the charts and just like that, the setup you've been waiting for arrives. What do you do? Do you take the trade? Or do you stand aside and wait to see what the market does? You just nip to the shop for some gravy, for some dinner. But the move you've waited 3 days for comes along and you haven't made any pips that day or week. What do? Do you enter the trade? Or do you go and make your dinner? Now, we just went through 4 questions and only you will know really what you would do. And I'll tell you this, why is it that the 3 questions students say no to here, in most cases, are the 3 they say yes to, live trading. So when you're live trading, you know the market's moved away from your entry and you know you shouldn't take the trade, but when you're trading live, you do it. Why when your friend tells you to go short when you haven't looked at the charts and you scurry and run to your trading platform to sign in, do you then go short when you know you shouldn't be doing it without doing your own analysis? You've patiently waited for your setup and it arrives, but you sit aside because you're scared of losing, the fear of losing. Okay, you nip to the shop, to buy something for your dinner, but you waited 3 days. It's been 3 days since you've traded, and you haven't made any pips that week, or that day, or that month in fact. What do you do? Why do you take the trade when you know you shouldn't take it? This is what happens to many traders. There's times I personally go weeks without trading. Okay? I go weeks without trading, and there's times I feel to myself like, why aren't you trading? You're a trader. But as you realize and grow and you start to make money, you realize that you don't need to trade every day. You can trade on your terms. If you want to trade, you trade. Learning to say no when you need to say no is essential. It's something I focused on in the beginning of this class, that you have to be able to answer the question. Learn to say yes when you need to say yes, and learn to say no when you need to say no. These are the questions that you know in any situation you shouldn't do. So make sure when it comes to trading that you don't say yes when you need to say no, because you will really regret it, and it will really damage your confidence. It will damage your trading account fundamentally. You will lose loads of money if you answer the questions wrong, and it will hurt you even more when you know the answers to the questions and you know that you've gone against them and put the wrong answers in. There's over 3 trillion turnover every day in the Forex market. 3 trillion pounds turnover every day in the Forex market. I'm sure £100 a day is enough for many of you right now, right? If you could make £100 a day from trading, many people will be sufficed by that. If you're not expecting to make 3 trillion every day, why are you so bothered? Why do traders become so bothered? Why do they become so sad when they miss a move? Moves come all the time. Maybe not every day, maybe not every week, but there's moves. There's so many instruments to trade. It's in our favors to be patient. There's so many things out there. You can afford to be patient. This isn't like something that happens once every 10 or 15 years or once every 20 years, like a crash or a depression. This is something that happens pretty much every day in most situations. Some days you will not trade, but that's okay. Who doesn't mind an odd day or two off work? How many of you would be so happy and thrilled to have a day off work? So why don't you have a day off work? Are you a slave? And it means you need to work every day? Trading is something, if you keep doing consistently and well, if you remain patient, you don't have to trade every day. I don't trade every day. I don't need to trade every day. Don't enter the market with a preconception that you are going to trade today. Because if you do that, you're going to take bad trades on days when you shouldn't be trading. You may start off losing in trading. I started off losing in trading. I can admit that and give people my experience. But if you're patient, you'll become a winner. I've traded for several years now. Okay, several years. And I went from a loser to someone who makes money from time to time, to someone who makes money. It's about patience. I want to thank everyone now for taking. It was very educative, and I hope that you accept and attempt to learn from the valuable lessons that have been shared. Thank you.